Are you correct? And many others did that if we sold Tesla earlier and then bought it back down. But one person was able to foresee these precise moments. Do you know him well? His name is Carter Worth, and we'll be seeing more of his analysis of Tesla. But before we do, make sure you like and subscribe for more shocking Tesla stock news. He boldly declared at first that Tesla stock was worth about $240, and the timing appeared to be perfect. However, he quickly changed course and suggested purchasing Tesla stock at about $110. Talk about an exciting ride. We were all intrigued by his market predictions, but just when we thought he had everything worked out, things took a turn for the worse. The stock fell sharply, as if in reaction to the previous quarter's exuberant rise. It was like a reciprocal, equal and opposite action, and we started to wonder why we had invested in Tesla after such setbacks. It felt like a battle for the stock to recover, trapping investors' money and leaving them wondering if they would ever climb higher. Now, you might be asking yourself, what's the point of buying into Tesla after such a setback? It's a valid question, and we all eagerly anticipated an answer, so trust me, you don't want to miss this. People have been purchasing the stock between $180 and $210 for the past 2 months, only to see it drop to a frightening $165. Enter the well-known chart master Carter Worth, who made the shocking discovery that Tesla shares were on the verge of going. The stock has increased more than tenfold since 2019, despite the fact that some may contend that the time has passed and that it is too late to jump on the Tesla bandwagon. It is still 10 times greater than its modest beginnings. Therefore, instead of making the mistake of believing that the opportunity has slipped, finding a medium ground and keeping part of the advantages from the past while allowing the remainder to benefit from possible future growth is what Away Work recommends. People should keep in mind that this mind-bending journey through the highs and lows of Tesla stock illustrates the market's unpredictability. While short-term gains may be alluring, the long-term view is what matters most. This is one of the reasons actively managed funds frequently underperform the market by cutting their winners off too quickly, missing out on substantial growth. Let's take a closer look at a perfect example. Don't be one of those people who look back in 2030 and wonder what could have been. Instead, embrace the excitement, risks, and potential rewards that investing in Tesla can bring. However, this approach denies you the opportunity to experience compound returns, leading to significantly lower gains than you could have achieved. And her obsession with Tesla stock, Cathie Wood has long made Tesla her preferred investment. ARK Invest produced an incredible 4.44 return. Although Cathie Wood has made intelligent comments about Tesla, my Taiwanese Canadian wife might consider the number fun cursed if I showed it to her. In Chinese, the number 4 sounds like the word die, thus seeing quadruple death in the performance figure can be rather menacing. The reason for the stock's 741% increase in ARK Investment's losses over that time was that winners were cut too soon. Carter went on to say that anything is possible in the stock market, but I've noticed over the years that when price targets are too high, they lose credibility. When I write notes for families or hedge fund managers' pension plans, they frequently imagination. It's simple to adopt the mindset of having lower expectations if you have never seen the stock double or even increase tenfold in a short period of time. Many people assume that the long-standing mystery of fossil diving is an insurmountable task because it hasn't been solved for decades. But let me tell you, friends, that way of thinking will only limit our potential. Since innovative ideas frequently come from beating the odds, just because no one has dabbled in the field of electric vehicles previously doesn't mean they are impossible. Let's get right to the point while talking about Tesla's advancements. It's critical to determine whether we're focusing only on the stock price or if we're also looking at margins and cost-cutting measures. Well, my friends, this recent sell-off is the complete opposite of what happened over the last 2 years. We have a stock that nobody seems to believe in, but analysts keep raising the price targets. And guess what? The stock keeps the flying exportation soaring higher and higher. But let's pause to consider the great revelation, if you will. The highest multiples. My dear managers are frequently credited with starting businesses before they start making a significant profit. In the case of biotech and technology stocks, see that it's all about aspirations, dreams, and the boundless potential they hold. But when you start making cars, you start to make real profits and build real margins. James by himself is no longer sufficient. It's time to face reality. This is where things get interesting. If we dare to trade it to the real world, there is a chance, possibly even a good chance, that profits could temporarily decline. Here's the twist. Tesla may decide to strategically lower prices even more, which would have an effect on short-term profitability. It may seem counterintuitive to my friends with lower incomes that the stocks might skyrocket, but believe me, there is a reason for this craziness. Let's take a moment to change our focus and examine the world of dreams. Tesla's beloved investor still has a lot of goals that he hopes to fulfill. I firmly think that one of the things that will come to pass is the Cybertruck, which is the pinnacle of futuristic driving. Although investors may have lost faith in fully autonomous driving, that is exactly what works in our favor because, as you can see, there is no assigned valuation for that aspect of Tesla's business, which effectively lowers the stock price.